Welcome to Bitcoin Escape Plan. We just saw a really important signal flash on the Bitcoin chart that we'll be going over today's video. As always, we start off with the 4-hour chart just to give kind of a brief overview of what direction the price is going to be moving before we jump into the higher time frames. If you are new to the channel, you can go check out bitcoinescapeplan.com. Every Monday, I release a newsletter that goes over what I believe is going to happen with the price. I am alarmingly accurate. It's great. I love it. Making these videos is a lot of fun, and just in general, helping people understand Bitcoin is something I'm very passionate about. My goal with this channel is to help you accumulate more Bitcoin. All right, let's get into the analysis. So the 4-hour chart, something super, super important. This is crazy. This is the anchored VWAP. As I went over in a couple of videos recently, I never changed this tool. I literally set this tool back in 2011. I wasn't using TradingView in 2011, but in 2011 in the chart, I think I've literally had this on my chart since, I don't know, like 2020 maybe. Like I never moved this. I just listened to what it tells me. So this is the 4-hour anchored VWAP. This is the middle band. The fact that we are touching the middle band in general should confirm that we're in a bear market. If you still think that we're not in a bear market, you are ignoring the key indicators that are telling us that we are in a bear market, because normally we spend most of our time above the upper band, and the upper band is currently sitting at 95.6K, which unfortunately I don't think we're going to see again this year. Very sad. So sad. I'll go into that more later in the video because that is a crucial pivot point. That unfortunately, it just looks like we're going to continue to fail. So in the short term, what happened yesterday? So Thursday, we had a failure of the 4-hour SMA earlier in the day that resulted in a retest. We had an initial wick retest of the 4-hour anchored VWAP. That's what led us to the 4-hour SMA retest and failure, and then broke down. And what we really needed from that first wick was we needed more confirmation of, okay, are we done with this? Are we not done with this? That being the anchor VWAP middle band. And as you can see, these candles right here close like right above it. Again, I drew this tool like 6 years ago. I never moved this tool. That's the power of it. So if you're on TradingView, you can go over to the projection tool, and it's in volume-based anchored VWAP. I also use the anchor volume profile. That's this guy, the thing over there. But the anchor VWAP is amazing. Shout out Chart Champions. It's the fucking greatest tool in the world. So what happened next was we saw some strength going into the end of the day on Thursday, and now we have seen strength above the 4-hour SMA. The 4-hour SMA is once again starting to curve, which could theoretically be a good sign, but not if we continue to fail important levels. So it doesn't really matter, honestly, as long as we continue to fail key levels. On the higher time frames, 70.2K is a really important one that we need to pay attention to. But on this lower time frame, it is 69.8 that is showing up. So the psychological levels that are important around that range is 69K being the all-time high peak of 2021, and 73.8K being the early peak of March 2024, which was historic because it had never happened before. We had never seen a new all-time high that early in the halving year. Typically, it's towards the end of the halving year. So it did set a new precedent, and in my opinion, it's one of the main reasons why we didn't see as much volatility to the upside this cycle, and why potentially we could see less volatility to the downside this cycle. So what we're looking for now is a reaction to 69.5 initially. That's the exact closing candle, I guess, on the monthly, probably for 2024 levels, not for 2021. I'll go back and check that in a little bit. But yeah, we need to see a strong reaction above 69.8K. And if we just jump out real quickly to the weekly chart, let's close those guys out. Anything above 64K is going to be helpful, but we're still in the middle of this range. So we're not really in bullish, or, I mean, arguably still very bearish at the moment. Overall trend is still alarmingly bearish, and it is going to continue in that direction for the foreseeable future. So that's what we're looking for now is, can we get closer to this 76.2K pivot for the end of this week, being Sunday? At 4 p.m. PST. That's what I'll be looking for then. We'll have a new video then, not for the close, but I'll do another one on Sunday morning just to kind of update what happens between now and tomorrow. It shouldn't be very much. If we jump over to the daily is where that 70.2K pivot is at the moment. And we really need to see strength above that. As you can see, the last 3 days prior to today, we failed it after holding on pretty tightly to it for the 3-4 days prior to that. So that level is very important. It kind of sits right in between those two psychological levels of 69K and 73.8K. So I think, one, price is going to need to see if we can get volume back here. And as you can see, this volume is starting to step in at around that level, almost identical to that level. Technically, actually, at the 69.5K level is the another point of control there. The actual point of control is at 87.3K at the moment, and that's where we failed. That's where we saw a serious drop off. So we really will need to see a ton of volume come in at these prices. And I'm starting to see some, I saw Coinbase bought $39 million worth of Bitcoin yesterday, which, again, you got to keep in context. This is a $1.5 trillion asset, so $36 million is just not a lot of money. It's not enough to move the market. I saw some other news about how Trump is quietly selling Bitcoin, even though he's been telling everyone to be buying it. His company, I guess, sold a couple. Sold probably a lot of Bitcoin. I'm not sure the exact amount. I really, as you know, if you follow this channel already, I don't give a shit about news. It's not important. I pay attention to the charts. The charts are going to tell me what is actually going to occur and what is not. So in the short term, we want to see strength at 70.2K. And then if we can get a rise above 75.5, that's going to be great, because this is where the daily SMA is currently sitting. I would imagine that is going to be pulled below that pivot point, though, before we interact with it. So it's going to be the same as, I've mentioned this a ton in other videos regarding the 96K pivot, as something where the weekly SMA is going to continue, and it already has. It's already dropped below it. We already see that trend is going to continue. That's going to put more and more pressure when we do eventually interact with that SMA again, as the 96K pivot is actually going to form as resistance as opposed to support. So even if we can build support at 70.2 and at 76.2 and whatever the other one was, 75.8 or whatever the fuck it is on the lower time frame, if we can build support there enough that we can rise to the weekly SMA, which is currently sitting at about 94K, we still are going to have a lot more strength than we would have if this weekly SMA had rounded out, or if it had continued to consolidate. And it's not. It's continuing to drop. So there's nothing really that is telling us that the trend has shifted. If we look at past cycles as well, it's pretty clear. Once it starts trending downward, it continues in that direction for an extended period of time. The only difference being, we did have a 2019 was an interesting year. 2019, we did see a rise past the midpoint. And really, we saw a rise not quite to all-time high levels, but to levels that were pretty close to the all-time high by about June of 2019. So I do kind of expect that for next year, potentially, because again, who was the president during this time? Donald J. Trump. So what I'm expecting is a continued breakdown into the rest of the year. Now, this here is, technically in terms of the actual drop, it is a little bit more violent. Yeah, this is end of January. So this is a 68% drop. So that is actually more violent than what we just experienced, which was, I believe, a 50 or a 52% drop. It doesn't feel like that. And quite frankly, it looks a lot uglier on the chart now than it does then. That looks worse. That looks significantly worse, even though it's not. By the actual measurement, it's only, 52%. So it's actually less volatile to the downside, like I said, than it has been in previous cycles, but it's still doing exactly what it did in previous cycles. So let's zoom out real quick and take a closer look at that and what that means. So this is 2022 or 2021. We started breaking down. We interact with the weekly SMA by the end of November. When did we interact with it here? We were already breaking down in October. Now, granted, the peak was in November that time. The peak was in October this time. So we can kind of equate that to the same thing. But, it's just starting to fail downward. We then had the failure, the rise back up into December, the continued breakdown and failure. This is the 47.6K pivot, which I think of kind of like a spiritual predecessor to the 96K pivot because it's literally twice 96K essentially. So what we saw there, this is very similar here. We saw a failure of that pivot, a drop down towards the next one, consolidation, and some chop throughout February and March. And then we did break above that weekly SMA, saw a touch at the 47.6K pivot, and then continued failing and breaking down. That is my initial, what I think is going to happen. Just that'll be the 96K pivot instead of the 47.6K pivot or whatever. The problem is going to be this guy, is if we can actually show strength here at 64, which may take us a couple weeks. We may chop at these levels for the rest of February before we see a rise. I do think if 96K is on the table, then we would see a strong rise into the end of this week, which we are kind of seeing now. It's not really, we would need to get above 76.9 roughly. Really, I would be happy with 75.6. If we can close the week at 75.6, I think that is enough momentum where next week we'll be bullish and we'll break above that 76.2K pivot. And then that gives us permission to come towards that weekly SMA before it continues dropping. But pretty clear at the moment that it's going to continue dropping. And it's essentially at not quite the lows of April, May of last year, but you can see it's very similar level to then, which is just going to continue to pull the price down. So if it were to play out the same way as 2022, what we would expect is strength here. We break above there. This is still dropping. We're still chopping in this range. Like once we get there, 80K is still going to be super important. If we look at the volume profile, 80K is like empty. Like there's just not a lot of volume there. So we would really need to see volume like step in a meaningful way, kind of the same way that it has here at 69. People have stepped in at 69 relative to the other price ranges here. But as you can see, all of these people, all of these short-term holders are in loss right now. They're in significant loss. And what they're going to be looking for is opportunities to mitigate that loss. 96K, super important on the volume profile. If we get to that point, a lot of that volume profile is going to thin. A lot of that is going to thin. People are going to get out at those prices. So that's really what I would be paying most attention to, is if we can get that push towards that pivot, that's not going to be a bullish signal. That's not going to be a time where we're now suddenly going to shoot past 100K. It's not going to happen. And the psychological levels that we're really stuck between right now for the broader term as opposed to the short term is 63K is the halfway point of 126 in October. Super, super important. As you can see, we just saw strength above that, or currently in the process of trying to print strength above that. It won't really matter until the end of this week, quite frankly, because we're still dropping down like pretty sharply. So 63K and 100K. 100K, super, super important psychological level. And I don't think that we're going to see it. This wick that we got here, wicked to a high of 97.9K. And that candle closed at 93.6. So it closed way below the 96K pivot. So we're already showing weakness there when we initially touched it. So by the time that we touch it again, I just think that it's going to be an event that causes most people to lose faith and sell out, because such a significant amount of volume is at that level. Like look at how much volume is between about 86.7K and about like 96.6. That's a lot of volume. By far, the largest amount of volume in the chart is at that level. And that's probably people who saw it coming down here initially and were buying this dip with anticipation that we were going to see that. And that's not what happened. We saw a significant breakdown once we got to that level. Legendary short for anyone who was able to catch that. Me personally, I'm not really taking trades right now. I'm more focused on just getting my credit in a position where I can go heavy on my credit leverage strategy later in the year. There's a possibility that we just break down to 50 immediately, like way quicker. The monthly chart looks ugly. If we correlate this to past charts, like it does look very similar to here, where we're already at the part where we're going to start dropping down significantly. Now, granted, this is May, June, so the seasonality is still very important. We did fight to kind of keep the monthly SMA in 2022, whereas, forgive me, we've already broken down here. It's already like clear that it's leaving us. So there's a good chance that we actually just do not see it again, and then we've already broken down. Same thing here. This is way later in 2018 that we actually broke down. So we're just seeing it happen quicker than normal, at least in terms of relationally to the SMA, meaning the price wants to be up here, and it's just clear that we don't have the demand to actually get it there. It's going to continue to head towards this, which is about 55K. This is the bottom of the Bollinger Band on the monthly time frame. Now, we don't spend a ton of time below it. We don't even always touch it. You can see in 2018, we didn't even touch it. We touched it briefly in 2022. This is June, where we dropped down to it, saw a recovery, and then the price actually ended up lower than that point where it broke it. But that was after it had already risen back up, and it allowed the Bollinger Band to fully open up to the downside. So that's kind of what we're looking for right now. Is it's still sloping upward. So we actually want to see it flatten and start to slope downward before we can be confident of the consolidation phase of the market, which there's really nothing wrong with starting your DCA now, in my opinion. You're just going to have to wait, essentially. So if we look at this point on this chart over here, we are above that still. This is 38K. We're above that still. I've talked about it several times on this channel. The lowest I can believe that we go this cycle is like 34 to 39K. I'm starting to think it's more likely that it's just going to be like 45 or 50, but 34 to 39 is like the lowest that I can actually believe, just based on this is 35.1. This is kind of like right in the middle of that channel, and it's also the top of that major breakout here in October of 2023 when the price is actually like starting to rise. That was anticipation over the ETFs largely that were driving that at that time. So we don't have another catalyst like that is going to randomly jump the market yet. Other than I would assume that's going to be the stable coins this time. So that'll be in 2027. There'll be some news where the volume of stablecoins has reached a local maximum or whatever, and the banks are going to be really trying to get their customers to buy a ton of Bitcoin then, and that will likely be what starts to send the price higher next year in 2027. But everyone who is like waiting for that liquidity now, I think that they're going to be upset and that it's going to continue to go down. I'm so sorry if you hear that loud banging underneath me. I don't know what my neighbors are doing. So currently at the moment, monthly SMA, we're way below it. No signs of strength at all. There's no other time on the chart where we are in this circumstance and we show strength there. This is the only example is 2019. We did see a rise up into it. But again, that's 2019. So for us, that's 2027 that we would actually see precedent for it to rise. And it wouldn't be until like March or April of next year. If we go over to 2014, largely the same thing. You can see almost identical. We saw, in this particular case, we saw a rise in January, and then the significant drop was in February, and then a recovery into March that was lower, and then a failure, and it continued to chop a little bit until fully giving it up in July, which is my expectation, quite frankly. That is what I think is going to happen, that we're going to see a lower high in June, July, that is what actually causes us to have our full capitulation event. So if we go over here once more, what that would look like is we start to see strength in February rather than a sustained breakdown for the rest of February. So we see some strength. We get towards the bottom of this candle. That's 75.6K. If we're able to close there, that gives us permission in March to potentially rise higher into this candle. The monthly SMA is currently sitting at 89.6K. And again, we have no precedent on the charts for us to retest and reclaim the monthly SMA this soon after losing it. Like, it doesn't exist. There's no time on the chart where that is the case. Typically, it takes a while for it to break down on the monthly SMA before giving it up. But then once it has given it up, it gives it up for a long time. I don't care what the news is. It doesn't matter. It's going to continue to give it up. Probably until it sees an interaction with about 55K. And then it would be a bounce from there. And then we would expect the Bollinger Band to fully open up to the downside. And then we would just chop, basically. This is more what I'm anticipating for basically post June, July. It's hard to say if we're going to see a peak into June, July. I would anticipate that's going to be closer to the 80K pivot than 96. I just don't think we're going to get back to 96. Like that's what I was talking about for a long time. You know, if you go back and you watch November videos and December videos, this is really what I was talking about. Was I don't believe that the market could get higher than 106.8K, but I think I was undervaluing how important the 100K psychological level is. And I've said this multiple times on the channel. I really believe that if the news could only run one story, I don't know why I'm doing two fingers, one story for all of the year in 2026, that one story is how low can the price of Bitcoin go? And that's what it's going to do. That's what we're going to see is we're going to see a sustained breakdown and continue into the rest of the year. I think the story for 2027, if they could only run one story, is can the price get back above 100K? That's it. That's the only story they're going to run all year until the price is actually able to break above it. And it'll probably close the year closer to 106.8K. Again, this is 2027 that it's going to do that, not 2026. So in the short term, what I was hoping to see was that we would see some strength here and hold on to it and get one more retest of the 96K pivot. But it's really looking like we got it already. Like that was our test of the 96K pivot, and now we're done. There's a possibility that we break back to the upside, but again, there's just no precedent on the chart. It doesn't exist. There's no time on the chart where it actually behaves that way. So that is something that I think we just have to acknowledge is you can want the chart to go higher, and that's cool. I want it to go higher too. But the reality is when it behaves this way with the monthly SMA, overwhelmingly, it's showing us that it's going to continue to drop lower. Let's look at the anchored VWAP over on the monthly time frame instead of the 4 hour. The 4 hour is the one that I pay attention to the most, but the monthly is really important because it actually shows us where we're going to interact with the bottoms. So this is 2022, and as you can see, we go right down to it pretty much. So at the moment for us, it's sitting at about 29.1K. Now, the overall trend for this is actually that we're getting further away from it with time. Because as you can see here in 2018, we break way below it. I don't know if it even goes back in the 2014 one. Yeah, the 2014 one doesn't really count. Legally, as of around here, Bitcoin becomes property in the United States. That's a sell the news event. And then we break down below the middle band, and then we start to rise above it. Again, on the 4 hour right now, we are just above the middle band. We just touched the middle band. But the progression that we see over time is that when we drop to the monthly SMA, the monthly anchored VWAP, we, in 2018, 2019, dropped way below it, whereas in 2022, 2023, we just barely broke below it. Like it really was not like super, super far. Well, I guess that's a pretty significant drop below it. This is about, 10%? Slightly less than 10%, probably about 8%, which is not crazy. But what I'm noticing from that is that it's diminishing how far it drops below at that time. Like, let's look at this guy. I don't know, I clicked the button again. Jesus Christ, that's a 42% retracement from the anchor VWAP in 2018, as opposed to this instance, where again it's like an 8 or a 9 or 10% drop in 2022. So what I would be anticipating this time is we either don't touch it at all, and we actually get strength somewhere up here. It's 30.5K. Again, what I actually believe is closer to here. This is 34.4. I feel like that's more where the bottom is going to be. And there's also a lot of time for this anchor view up to continue to rise. Like if you see here, when we actually made our first run for it, the anchor view up was at 16.8K. And by the time we actually interacted with it, it was at 17.1. So not really that big a difference. I mean, that's just the difference between currently it's sitting at 28.9. And we haven't touched it yet. In fairness, we're still way above it. This is June, so we still have a long time for it to break above it. So let's actually look for January, February. It's about 16.1, about 16.5. So it is higher. It is definitely higher by the time we actually interact with it, but that's not really that much. I mean, that's the difference between it being at 28.9K to about like right there, like 30.5. So I would say our only saving grace on that is just the overall trend is that we interact with it for a shorter period of time, at least on the monthly time frame, over time. So that's really what I'm anticipating is we're probably going to see we're not even going to break it, I don't think. Or if we do, it'll be really, really short, and it'll be more similar to what it looks like on the 4 hour now, where like we saw a wick below it, but the closing candles are right above it. And even here in 2022, you can see these closing candles are below it, but not like way below it, not like in 2018. Like that's way below. But we didn't touch the middle band. We got close in COVID. We got close to touching the middle band. But in 2022, not even close. Not even close. Now, part of this is because we still had a lot of liquidity from the Japanese yen carry trade and just a lot of liquidity in general during that time before all the banking crisis stuff in 2022. But when you think about it in that context, this is when crypto was like probably at its most scary during the FTX collapse after BlockFi, Voyager, and Celsius had already gone under. Really scary time in crypto, and for it to like still basically hold on to the anchored VWAP and like not give it up much, not even go anywhere near that middle band, that's strength. That's strength. And again, just because I'm saying that the price is going to continue to go down for the rest of the year, you got to take in the context of where we are in 2026. Governments are publicly announcing plans to amass Bitcoin. I just saw one from Brazil where Brazil is planning on buying 1 million BTC, which sure, good for you, Brazil. I don't know the time period that they're planning on doing that. And it's probably the same as with the US, where the US, like Trump got elected on strategic Bitcoin reserve. And where is it? I don't see it. It's not actually what they're planning on doing with that is just continuing to seize funds from other people. That's what they did in Venezuela. Like they're just gonna. Why would they pay for Bitcoin when they can just take it from you because you're a criminal? I mean, Maduro is a criminal, but whatever. You know what I mean? That's the modus operandi of the government. That's how they're going to get their Bitcoin. Is they're going to seize it from people. Just like this is an older story, but there was a Chinese hacker group that stole whatever, like $4 or $6 billion worth of crypto off an exchange. And when the U.S. seized that money, they didn't give that money back to the people that the hackers had stole it from. They just took it. That is how governments are going to continue to amass Bitcoin. This is very important, actually. I'm going to go on this rant for a little bit longer. This is super important in general for the thesis for this channel. And I talk about this in the book. What most people are going to be doing over the course of the next 2 decades is trying to convince you that Bitcoin is boring, that the ship has already sailed, that it's not important, that it's not the one you should be focused on. They are doing that so that they can continue to buy as much of it as possible while the prices are low. Those people don't give a shit about the other coins in your portfolio. They want you to have other altcoins and all this other nonsense because that means less Bitcoin that you are buying and you are easier just to rinse for liquidity. Altcoins, meme coins, NFTs, all of these are just smokescreens and distractions from getting you to accumulate more Bitcoin. That's why I made this channel, is to help make it easier to understand. Bitcoin is the one that you want. It's not too late. It's not too old. Governments and corporations and wealthy individuals are amassing as much of this as they possibly can. They're educating themselves on how it functions, how it works, what it is, And I don't think that we're going to see a world where Bitcoin does not continue to accrue in value, whereas a lot of these other tokens, a lot of these other projects just never will actually accrue value. They may do stuff, but that doesn't mean they're actually going to accrue value. Bitcoin is going to function as an alternative to gold. We're currently seeing a lot of strength in gold at the moment. We're at new all-time highs, and even after a pullback, we're still probably going to continue in that direction. In my opinion, probably until 2029, 2030 for gold. I'm not saying it's going to be 80% per year, but I think it'll slow down. But I don't think that it's going to stop rising until stocks and real estate have both seen their local trend bottoms. I go over this in other videos. This is not an SPY video, but the SPY local bottom was in 2009, and the real estate market was in 2011, 2012, and gold peaks by around 2012, 2013. So both markets had already seen their local bottom and a start of recovery before gold had topped and money started flowing out of gold back into those other markets. And it will be the same for Bitcoin, where gold will continue to see strength. And then once it's reached its local maximum with the other two markets, that money will start to flow overwhelmingly into Bitcoin. So I do think it's going to be very boring for the rest of the year. I think it's most likely that we see strength into March and then a failure and then consolidation into April, May, probably a bit more of a drop there. And then into June, July, we see one more rally. Especially like the president's going to be trying to get everybody hyped about the UFC event on the White House lawn. I really think that that's going to be a local peak, probably both for stocks and for Bitcoin. Stocks, if we're looking at history, I do think that it's a possibility they run longer. Depending on what positions you're in, I would pay close attention in July. But between July and October would be what I would anticipate as the stock market peak. That will also kind of be dictated based on the real estate market. The real estate market at the moment still looks very, very strong. And yeah, that's kind of like until those major shifts have happened, it's going to be boring for Bitcoin, because why would you put money in Bitcoin when SPY and gold are ripping? Like, why would you do that? Both of those are super safe, super reliable, and most people still view Bitcoin as like this volatile, like scam coin asset. I cannot believe how many negative comments I get on Threads about like people calling it pedo coin because of all the Epstein stuff. It's just delusional, like him having email correspondence with Satoshi, or I don't even think Satoshi had already disappeared by 2015 when those emails surfaced. So it just like doesn't really make any sense when Bitcoin was created in 2008 and went live in 2009. So it's just like anyone who believes that story is probably a walnut brain. Like they don't actually want to be educated on what Bitcoin is. And what gives it its value is the decentralized nature, is the publicly verifiable nature of it. Like I can't say that you don't have the Bitcoin that you have. Even if I did, it doesn't matter. You still have it in your wallet. So I just think people are delusional about certain narratives that surround Bitcoin, which is why I made a channel to help you with the charts, because you just should not be paying attention to the news or what the president says. You should be focusing on what the chart says. What the chart says is that we have significant weakness on the monthly SMA, and that also holds true for all of the other time frames. Before I end the video, let's take one more look at the Anchor VWAP on the weekly time frame. Pretty much the same story, where we saw more strength. At this time, we did chop quite a bit around then. But pretty much the same as the monthly. We saw in 2018, we saw closer to the middle band, didn't quite touch the middle band, but that's pretty much the story for every cycle. Is we spend most of the time above the upper band for the anchored VWAP until we eventually trend back down towards it and either break it or hold right at it. Again, this is March 2020, so not very common on the chart. But we're seeing over time, we're seeing a strengthening of this trend. So what we're waiting for now is for the anchor VWAP to start to actually consolidate and curve, whereas now it's still rising. Here it was rising all the way until about here. This is April of 2022. We're still seeing a rise before it starts to flatten out. So I would imagine we're going to see the same thing now. We're going to see it continue to rise until about April. I don't think it's going to be that much higher than it is now. Again, probably 30.5K, maybe 31K. And what we're really just going to need to pay attention to is, do we see strength before then? In terms of Fibonacci pivots, the lowest one that we have printed at the moment is 44. I don't know what this one is or why it's not showing up. Jesus Christ, 10.2K? No, we're not going to see that. That one is not relevant. This one's probably more relevant. This 36.9K. Again, that's kind of like right at about where I could believe we actually would bottom, somewhere between 34 and 39. I'm not going to wait that long to buy it. I got to be honest, once we hit 50, that's when I think it makes sense to like start unloading your piggy bank, because you got to think about it psychologically. Like, the main numbers that everyone was talking about for 2025 for the peak was people wanting to see 200K. Like a lot of people said 130, 150. I think those are conservative targets. I think it was completely reasonable for people to desire those. I don't think that we're going to see those until probably 2028 at the earliest. And that is predicated upon how quickly we show strength at 100K in 2027, which may take the whole year. It may happen very quickly. It may take the whole year. I think it really depends on how successful the stablecoin launches are, specifically with JP Morgan Chase and Citi. But if Citi and JP Morgan Chase are able to like really have big expansion with their stablecoin portfolios, it's going to put more demand on the bond market. The Fed is going to be forced to print more treasuries in order to meet that demand, which is going to put even more money into the market. And then a disproportionate amount of that will flow into assets like Bitcoin and AI stocks. So it's kind of what I'm looking for. Is I do think we'll see more strength than in previous cycles to the downside. We got to remember, this is the ETF buyers. So we have significant strength above about 55, where like people are not going to want to sell that level. Like all the old people who bought IBIT in their retirement portfolios, those people are going to be really sad if the price breaks below there. And they probably have a bunch of money that they are still sitting on. So they're going to do one of two things in that scenario. Either they're going to get rid of all of their IBIT, which is going to further crush the price of Bitcoin downward, or they're going to double down at that point, and we're going to see the market recover there. I don't know that I believe that personally. I'm not someone who believes that the 4-year cycle is over. I know a lot of people believe that the 4-year cycle is over. I am not seeing that reflected by the chart. It looks identical to other times so far. The only difference being it's slightly less parabolic, but like this is a sharp uptick kind of all at once towards the end of 2020 into 2021, whereas we saw it early into 2024. Like I said, the March, April peak of 2024, I think really like cut the amount of volatility that we were going to actually be able to see for 2025. Not necessarily in a bad way, just like we just front ran it rather. So the likelihood that we were going to get higher was low to begin with, because we had so much bullish momentum, both in early 2024 as well as based on the election news. Like we saw a really, really big jump that didn't really allow us to like slowly, gradually come into those levels. It was more sharp, required a pullback, and then continued. So I think something similar is going to happen now, where we require a pullback to see how much conviction those ETF buyers actually have in those ranges. And we won't really know until we actually like see the price break down to about 55. That's going to be a crucial zone where you're not necessarily going to be wrong to go long there, but you will still experience short-term downside if you buy in en masse there, which is why me personally, I'll start DCAing at those levels. And again, there's nothing wrong with DCAing now. You just have to extend your time horizon. Like if you were buying here in March 2022, again, prices are still above 45, but I don't think it's impossible for them to break below now, which means that basically you would have held that for 4 years and would have been below it for a full year initially. So you would have been too early if you had bought there. If you bought at 45, you could have gotten in at sub 20 for multiple months. You could have got in at sub 20. So we're kind of in the same circumstance now where I don't really know why you would be buying heavy at 68 when the mere fact that we are at 68 is indication that we are going to go down lower towards 55 or 50 or lower, just by the mere fact that we are at 68. So for small DCAs, nothing wrong with it. And in general, just like amassing more Bitcoin at the end, or not the end of, but every month you should have more Bitcoin than you started with, is like a core philosophy of Bitcoiners. I think you can extend that to every year. You should end with more Satoshis than you started with. Me personally, I am more focused on the end of the year and just in DCAing more heavily below 50K as opposed to above 50K. I just don't think, I don't know why you would be buying heavy at 68 if you believe that the price is going to go to 39. And again, it may never get there, so I will start buying heavier. Really, once we break 50, there's no reason not to literally go into debt to buy Bitcoin, in my opinion. I go over that more in the credit leverage video. And if you have questions about that, feel free to leave comments down below. I don't think I told you to like and subscribe, so like and subscribe. That's pretty much it. We really want to see strength above the 4-hour anchor VWAP level that we mentioned earlier. I'll go take one more look at it to see exactly where it is at the moment. And it is at 65.7K, 65.8. We're going to interact with that again. We're going to break down below that. I just don't think it's going to be now. We're showing a little bit of strength above it. We did see a sharp break below, sharper actually than we saw the retest. I don't know why I'm so tired. We saw the break above here, in January for the upper band, and we saw a more violent break below the middle band here. So again, that is overwhelmingly bearish signal, period. There's no way to interpret that as a bullish signal. So really what we're looking for now is just a recovery past 69.8 and 70.2K. That'll give us permission to get back above the key psychological levels of 69 and 73.8K. That may give us enough momentum to make another run towards 80. But I think increasingly over time, we're seeing less and less likelihood that we are going to get above the 96K pivot, let alone the 106.8K pivot. I don't think that's going to happen. I don't actually think that we're going to see the price above 100K for the rest of 2026. I know you don't want to hear that, but I don't think we're going to see it. I think more realistically, we're going to see a lower high formed than this 97.9K wick. So in an event where we do wick back to 96, I think that the wick is going to be right around there. And the close is probably going to be closer to, say the weekly SMA continues to get pulled down. By the time we interact with it, I think the candle is probably going to close really close to the SMA, and the wick might touch 96, but the candle is going to close closer to whatever, 91 or 93. Probably 91.5, not 93, because we already saw that before, those levels right there, and then it gave it up. So that's what the chart is telling me, is we do have more downside pressure. If we can hold above 64, cool, then we will potentially get one more bounce towards the weekly SMA before probably printing another failure and just continuing to go down. So I would factor that into your trading plan. If you're someone who is really trying to ride this volatility and is hoping that we get that major move to 96K, I would say it's fairly risky. I don't think there's anything wrong with taking a little bit of risk, but I wouldn't bet all of your chips on that, because it just does look bearish. It does look like we're going to continue to break down further. And a failure at 80 would invalidate that. So if we break above this 76.2K pivot, and for whatever reason we show significant weakness between about 80K and about 87K, then we're not, like it's very likely that that's where we interact with the weekly SMA by the time it gets pulled down there to about 86K. And then we just continue to break down. I don't see any news stories or any reasons why the price would randomly reverse here. Again, not while we're seeing so much strength in stocks and real estate and gold. Why would people who have money buy Bitcoin instead when the chart looks like this? It just doesn't make any sense. I know that's not what you want to hear, but like and subscribe anyways. I'll see you on Sunday with an update. But pretty much we really want to see closer to 76.2K for the close on Sunday. And we'll see if we get it. Have a great rest of your week, my friends.